So I'm going to be talking about government bonds in Uganda. So if you'd like to learn about how they work, how you make money out of them, what interest you should expect, this is the right video for you. So in a nutshell, government bonds are loans to the government, meaning you're lending your government, and in return, the government is paying you some amount of money. Usually, those bonds are of two types. What they call the short-term bonds, they're usually called treasury bills. Then there are long-term bonds, which are the actual bonds. Most times I recommend people to put their money in the shorter term bonds because of how fast the interest rate grows. But in this video, I'm just going to give you all the details of, what should you expect, what should you watch out for, so that you understand both the pros and cons of investing your money in stuff like that. So to start with, I'll begin with, of course, the part that involves the money making. Truth be told, government bonds are quite a safe investment. At least we haven't had an issue where the Bank of Uganda defaults on payment of these bonds. So on average, they pay between 12 to 18% annual interest. Meaning, if you've invested your 100 million, you anticipate, give or take, anywhere between let's say an average of 15%. But of that 15%, there's still an 18% tax involved, but 18% on the capital gains, not on the full amount of money that you're investing. So what does that mean? That means, hypothetically, if you had 100 million, if you invested that in a real estate project, that 100 million, that house, that property that you built in the 100 million after purchasing land, would give you an average at most 500k. Whereas if you invested the same over the period of a year, if say that real estate project is giving you 500k a month, that would just be 6 million. Whereas if you invested the same amount of money in a bond, that would be about 15%. So that same 100 million would make you about 15 million less the tax that you would get charged on that amount of money. So in terms of capital gains, it's honestly a much better investment than real estate in most scenarios, especially if you have money that you just want to store for 2 to 3 years and you want it safe, you don't want to touch it, so as well as keep it away so that it gains some money and it's safe, and you're sure that the Bank of Uganda would pay you that interest. So that's number one. On the other end, however, you need to understand that there's a bit of a drawback. Keep in mind that when you store your money, it doesn't matter the amount. The advantage is the minimum investment you can do is as little as 100k. What you need to consider, however, is the rate at which inflation is growing, because what sometimes people don't tell you about is how much our inflation is growing. Our economies, being third world countries, inflation rate is a bit high, sometimes 5%, sometimes 7%, and in the very worst case scenarios, even 10%. So you need to factor that in so that you know that, yes, I have my, say, 20 or 10 million or whatever amount of money it is, but this year, how much did inflation grow? So the value of my money, my initial deposit, has actually dropped by a certain percentage. So even if I have, say, made 15%, what is the rate of inflation, so that I can deduct that off the total amount of interest that I've made, just to give me the full curation of how much I have actually made in total. So in a nutshell, that's how bonds work. If you want to invest in these bonds, you can either talk to your bank or go direct to Bank of Uganda. There are some forms they give you which you take to your bank, you fill those in, and every 2 weeks they make a new issue of a bond that they're releasing and what that interest will be. Recommendably, do the shorter term bonds. Those are the treasury bills, 1 to 2 years. That way your money is not subject to a long-term inflation. So yes, in a nutshell, that's everything you need to know about bonds. If you'd like me to do a more in-depth video, just feel free just to drop a comment and I'll share as many details as you'd like with you.